In this video, you're going to see one of the trades that I took on a day that I made over $8,000 options trading. You're going to see the full setup, how I found entry, and how much this trade made me live. Then, at the end of the video, I'm going to come back and break the trade down further. For those of you who are newer to options trading, I have one extra bonus for you. Just prior to the live video, I'm going to go in and explain exactly what I'm actually calling out during the live trade, so you have a better understanding of what's going on. By the way, if you want to trade live with me every single day, please click the link below to see if you qualify. Enjoy the video. Okay, so to give you just a little bit better understanding of what you'll be hearing in this live video, you'll hear me say things like, I'm looking at the 637 puts on August 18th. What do I mean by that? Well, I can show you here. On the left, I have my Webull account pulled up, and I have what's called the options chain pulled up. Today is a Saturday, and so the actual open market is not running right now, so I won't be able to show you how the contract prices are dynamic along with SPY. But what I can show you is what I'm mostly seeing when I'm looking to buy options. And so first thing I'm going to do is I'm going to go in and I'm going to look at what's called 1 DTE, which is 1 day to expiration. And if it happens to be Monday through Thursday, this will be the next day. However, since the market is not open over the weekends, on a Friday, it will be Monday, which is the next trading day. What that is it defines the expiration of the option contract. Now, if you want to learn more about what options are, I'll have future videos talking more about it, but also check out my second video and I can get into what option contracts are further. But for now, what you need to know is that I select option contracts that are 1 business day to expiration. Basically, that means that these option contracts will last through the trading day of the following business day. Next, I look for what we call strike price, which is this column right here, and I look for option contracts that are priced between $1.30 and $1.70. I can get into more of why that is in later videos, but for now, just understand I'm looking for 1 DTE and 1 option contract that's priced about 130 to 170. And so in this case, if I was trading today, I would look for a strike price at about 643 right here, because that is priced in that particular $1.30 to $1.70 range. And then I want to be certain that I have the contracts that I'm actually looking to buy, calls versus puts. So in this particular trade that you're going to see, I was looking at puts because price was moving down, and I was looking to take entry on a firm 5-minute candle close below support. So you want to be sure you have your DTE set at 1 day to expiration. You want to be certain you're on the correct type of contract. You certainly don't want to be in calls when price is moving down. So be sure that you're on the contracts that you want, which is puts, and then look for a strike price that has contracts priced between $1.30 and $1.70. Now, these contracts move along with the ETF SPY as it moves. And so if we're looking at puts and SPY is moving down in price, the contracts are going to be moving up. Vice versa, if you're looking at calls and SPY is moving up, those contracts will move up. Now on the inverse, if you're looking at puts and SPY is moving up, those contracts will move down. Now, without getting too deep into why this is, just understand that when you see SPY moving down, put contracts will increase, and when you see SPY moving up, put contracts will decrease. What we're really looking to do is buy a contract on a firm 5-minute candle close, either below support or above resistance, and then have price continue to move in the direction it was moving. In the case of puts, if we take entry on a firm 5-minute candle close below support and price moves down, those contracts move up. Once it gets to 10%, we sell half our position and we move our stop to break even. If price continues to move favorably for us and gets to 15%, we will take another fourth of our position off and move our stop to about 10% above where we bought. At that point, if price continues to move favorably for us, we will trail our stop until we get stopped out. In this particular trade, you'll hear me say buying here filled at 148. What exactly happened was at the time that SPY closed below support, that contract was priced at 148. Then I put an automatic stop loss using our emotionless risk management system at about 10% below that 148. So you'll hear me say putting my stop in. At that point, when price continued to distribute down, that contract price was increasing. And so at the point when the contract hit just above 10%, you'll hear me say taking half off here. And then I named the price that the contract was at. At that point, I put my stop into break even. You'll see in this trade that I was stopped at break even after half our position was off. However, Despite getting half my position stopped at break even, this trade netted me $2,700. Enjoy the video. Seeing a pretty clean setup for some puts potentially here. We found support at 644.74. We had a number of tests as resistance, support, support, resistance, resistance, resistance. On the way down, this candle was respecting it. If we get a firm close below 644.74, I'll be looking for some puts. We got some nice draw, I think at least down to 644.25. And so I'm going to pull up my put contracts. The August 15th, 644 puts are priced at about 147 right now. And if we can get a firm close below that 644.74, I will take entry here. One buying here. I was filled at 149 and I'll put my stop in at 130. We've got a good amount of protection back up. We're really close to that key level that we took entry on. Hopefully will act as resistance now. We've got another level up here that was respected a number of times today. Plenty of room down. And we'll see if we can get some good profit. Try to target at least 10% on the first half of this year. So I was filled at 148. And so I'll try to get to about 162 or so, taking my stop off. And I'm selling half there at 162. Oop, I got filled at 166. Stop to break even. Nice fill on that. Sold at market there, so I got some positive slippage there. Got a reaction exactly to our predicted draw. My stop's still at 148 at break even. Should be at least a 5% trade, even if we get stopped here on the second half, which is fine. We had some very good confirmation on our thesis of where this would go. It went there to the penny. We're able to get profit off, have a good amount of capital here. And if we push further down, we'll get an even better trade. So those contracts are about 157 now. It looked like it delivered on draw and liquidity, so I'm not going to be too greedy in trying to get some more of these positions off before we get stopped. If we do, let's see if we can get another push down. Got a really nice fill on that first half, so I think we're actually above 10% on that first half. Just need a little bit more follow through, speed down. Even if we can get into that next range, this will be a fantastic trade. Happy about it either way. All right, stops at 148. I'm at 154. The contracts are at 154. And we'll let SPY do its thing. 2 cents from stop. Still in it though. Contracts are about 152 now, so we've got a little bit of room, but not much. Need a little flush here to stay back in it. Come on, SPY. Here we go. Let's see another push down here. Maybe I'll try to get a quarter off. Even if we don't get to our target of 166, maybe I'll try to get another quarter off at some profit here. A little bit more SPY. Come on. If we can get another push down, I'm going to slide my stop with this. Actually, I might just slide my stop just to protect some of the, or I guess not to protect, but to get some profit off that back end. Couple cents away from stop. Contracts are about 151 right now. My stop's at 148. Contracts are at 149 and stopped. Okay, so let's see, 18-cent move. Got about a 6% gain there. That's not bad. We'll take it in 5 minutes of work. Now, this was a nice little quick trade that I took just prior to the afternoon session, which typically starts around 2 p.m. Eastern. I hopped on to look at the charts a little bit early, and I saw something that I liked a lot, which is why I decided to jump into this trade. Let me show you what I saw. So from the morning session, we had price push up, test a level here at 644.84, and I saw it react, and then price pushed up and found the high of the day up around here. When it came back down, it did test that level, and once it had a firm 5-minute candle close below it, it distributed down. Now I came back and I noticed that we had a couple things happen, and I happened to turn on the charts right about here on this candle. I noticed that we had a reaction of resistance in the prior candle, and yes, we did break above it, but we had what I would call a false breakout up here because price did not distribute and follow through to the high of the day. And so I negated that as an actual level that we should be paying attention to, at least at this point. However, I did see price come back down and test that same level again at 644.84. And at that point, I saw it as support, and I noticed how price had moved most recently through this range right here, all the way from 624.25 to our key level, which was resistance, now support at 644.84. We had tremendous draw all the way down to this level. And so once we determined that this was going to be support, we had a firm 5-minute candle close below support. We liked our draw. This was entry on put. And you can see how key levels can often be respected so precisely. We had a very quick move down in that first minute. I had this level of 644.25 there before price came down. I was able to take half my positions off just prior to it. We reacted to that level. This was our draw. Now at that point, our hope was price would continue to push further, but with our emotionless risk management system, we took profit off, moved our stop to break even. At that point, we were comfortable with a green trade. Even if that second half of our position gets stopped to break even, it is still a very profitable trade. In fact, I made just under $3,000 in less than 1 minute. If you got a lot of value out of this video, please subscribe to my channel. And by the way, if you want to learn everything I know and trade live with me every single day, click the link below to see if you qualify. See you in the next video.